Some niggas scared to make that move, can't relate to that. I roll the dice, shit, if I lose, I'm gon' be shaking back. Cause lessons learned within the loss just elevate the fact that trial and error just the only way, ain't no escaping that. I wake up, hit 100 push-ups, then I'm at my route. Check on my stocks, see how they looking, then I'm sliding out. When you start seeing your progression, you stop having doubts. And what's the point of having clout if you can't cash it out? True to this game, and I'm a lifer, ayy. Feel like we finna change the cycle, ayy. That's the most success, you know we thriving, ayy. That's the most depression for our rivals, ayy. Could teach a lesson on survival, ayy. You know I'm from the bottom.
What up, wealthy people? It is your boy, David Bellard, one of the founders of the Black Wealth Renaissance, man. Here today with another great installment of the Black Wealth Renaissance podcast. Man, for everybody that's listening, before we get into anything, I need to make sure that you like, subscribe, rate, comment, and leave a review for this show. I am here with my brother from another man, my dude Jalen Clark. Been rocking since what shit? Some little youngins, huh?
8th grade, hell yeah.
Yeah, man. How you feeling, brother?
I'm doing good, y'all. What's up? It's your boy Jalen, another founder of the Black Wealth Renaissance podcast and Black Wealth Renaissance movement. Doing great out here in Dallas, Texas. Ready to get into this episode. But before we begin, I do want to give y'all a few little action items. Y'all make sure y'all donate to the show if y'all like and y'all want to support, but you don't want to buy some of the products that we got to offer. Just leave us a donation as a way to support this show. Make sure y'all just go to the link in the show notes and donate.
Gifts, donations. I'm saying it every time, but no, for sure, y'all. Always appreciate y'all tapping in, and today is different from no other. We have an amazing guest. Y'all have heard him on the podcast, seen him on the platform a few times. He was one of the speakers at our event on September 3rd in Dallas, man. It was an amazing event that night. If you missed it, you played yourself. People got so much value out of it. This brother here, I ain't going to do him the injustice of giving him a minor introduction, but he from the south side of Chicago, came from humble beginnings, is now an award-winning CPA and business tax strategist, none other than Mr. Carter Cofield, the Cofield advisor. How you doing, brother?
Hey, look, man, I'm blessed, never stressed, happy to be here with y'all, man. You know, it's a beautiful thing what y'all doing, so I want to come on here and give any game if I can, you know what I'm saying, to the people.
I don't know if I got any game
left. I don't know why Carter be bullshit. That's like that, dog.
Like he not one of them, huh?
Hey, I'm trying to say, man, like he ain't a big stepper, dog.
You know what I'm saying? But no, I love what y'all doing, man. And I'm a big supporter, you know, because like education, like we need this. Y'all are doing amazing things. So anything that I can add to that, you know, I'm gonna add to it.
Man, appreciate you. Definitely appreciate you coming out to Dallas. Like I said, adding value on that panel, man. Yeah. You had people very engaged, getting them information that I know people left with. It like, man, I'm gonna implement this shit ASAP.
ASAP,
yes.
ASAP, yeah.
ASAP, I like that. So Carter, man, I know I just mentioned, I gave like a brief introduction to you, but I would like for you to just kind of give people an introduction to them yourself.
Yeah, man. So my name is Carter Cofield. Born and raised on the south side of Chicago. 9 of us in a 3-bedroom home and 2 dogs. I don't know why we decided to get 2 dogs. There's already 9 of us in a 3-bedroom home, right? But you know, it was humble beginnings because, you know, grew up in poverty. You know, typical story. But then I came home from school when I was 14 years old, and my sister was sitting on the porch. I'm like, what's up? She brought me the news that my mother passed away at 14, right? So that was tough, and I was getting through that. And then, you know, 2 years later, same situation. Call home from school, giving the news my father passed away.
Damn.
At 16, right? So, you know, here I am, the 16-year-old kid with like, you know, no parents, no direction to kind of didn't know where I want to go. But at that moment, I made a decision, right? And I think we all have a inflection point in life where we're going to make a decision that our situation is going to either break us or it's going to make us, right? So at that moment, I decided that, you know, no matter what happens, I'm gonna let the situation make me and not break me. And, you know, looking back on it, you know, it was one of the best things that ever happened to me, respectively, because I lost my parents at 16. I had to grow up at 16. So the way I look at it now is I had a head start on my peers when it came to growing up and getting my life together. You know, most people don't grow up to like 18 or 21 or 25. I grew up at 16.
Postpone and keep going back to school, keep pushing
off adulthood. So like, you know, again, the way I had to empower myself, I was like, yo, this is an advantage because you got a 5-year head start on the people around you. And I just locked in from 16 and never looked back. So, you know, I contribute a lot of my success to like having to make that decision and having that happen to me.
What ranking of the siblings did you fall in?
I'm the youngest.
You're the youngest.
Yeah,
man.
I'm the youngest.
So before we even get into like the wealth and everything, I want to talk about the mental. What was that like actually getting through that grieving process though? Yeah,
man. So it was tough. So I think you can use it to grief to either like dismantle you or motivate you. Mm-hmm. Right. So I always operated back against the wall mentality. Like when you don't have a fallback plan, you would be amazed at how much you can do. Like, that's why I personally don't believe when people like, all right, this is my plan B. Like, no, fuck that. Like, plan B distracts from plan A, right? So if you operate with your back against the wall mentality every day, you would be surprised at how much you can do, and you get to know who you are as a man or who you are as a woman by operating with that back against the wall. Every successful person been through something, and that situation took them to the next level. So I think we need to operate more of a, don't be scared to like put all your cards in and like go all in on something. I think if more people went all in on something, they'd be more successful.
Willing to bet on themselves.
Hey, look, that you are the house and the house always wins.
That's deep. I like the you are the house, you always win.
So I want to get into your journey as a CPA. Okay. So I know you say you had to grow up early, you had to grow up fast. What attracted you to the route of being a CPA? Because that wasn't even a thought for me when I was in.
Yeah, bro. And I don't think I've told the story on air before, so it's good that we're doing it here. It's actually hilarious. So when I graduated from, what was it? High school, I believe, or a grammar school. I graduated during the recession. So it was 2009. So I want to say I was graduating high school, right? Yeah. So I graduated around the recession. So I knew I was good at math. I like numbers because I was always curious about money. So I like numbers, but I didn't know what I wanted to major in. So I was graduating near the recession. I watched like my aunt get laid off work and everybody get laid off and the gas prices sky high. And I literally Googled, I was like, all right, I don't have a plan B. So I can't be unemployed at any point in time. So I literally Googled what job has the lowest unemployment rate. Mm-hmm. And CPA was number one on the list.
Really?
Because no matter what's happening with the economy, every business needs a CPA. Every business that count. I don't care how good your business is doing or how bad your business is doing. Everybody needs a CPA. So that's CPA unemployment rate was 0%. So I was like, cool. If I follow this path, I will never be unemployed. And that was probably not the best reason, but like that was my reason. You
job security. Like it's better than go and get a dang. I seen a clip the other day. They got people. They got gender studies and liberal arts and like. I mean, okay, you got this degree. But what career are you going to get with this degree?
Facts.
It's you don't go to school just to go to school to learn. You go to school to learn to get a career.
Yeah, because you got to pay them loans back, bro. Some got to give.
Saying. Yeah. So I like that thought process in it. It's funny that's how it kind of came about.
Yeah, I was like,
so, did you ever work for like a large firm?
Yeah, bro. Yeah, so I worked at KPMG. It's one of the largest firms, like this number 3 of the big 4. Mm-hmm. So I started there, worked there for like, and that was like, for me, like getting that job, I was like, yo, I made it. Like coming out making $55,000, I was like, yo, I made it. We here. But then a couple years in, man, I was like, yo, is this it? And I never forget, waking up, getting dressed for work, and my cousin, who I was living with at the time, came in my room. He was like, hey, cuz, what's today? I'm like, bro, it's Tuesday. He's like, oh, I thought it was Saturday. I'm like, first of all, why'd you come all the way out your room to come ask me what day it is, right? And second of all, you a grown man. How do you not know what day of the week it is? And then he was like, cuz I don't know. He's like, well, I love what I do every day, so the days of the week don't really matter to me. And then he like went back to his room, went to sleep. Because he's always been an entrepreneur. So he's always done what he's loved. So like he dropped that ball on me, like as I'm getting dressed for work to go to a job I don't want to be at. He like, yeah, I do what I love to do every day. So the days of the week don't really matter to me.
I thought it was Saturday.
Yeah, and I'm like, bro. So from that point, I was like, yo, is there a life that we can live where we wake up every day happy? We wake up every day loving what we're about to do? And like 2 weeks later, I ended up quitting my job and started my business from there.
So I got a question because we're in this time right now where some people shitting on 9 to 5, some people not, but I don't want to go down that route. Do you think it's easier to be a successful entrepreneur whenever you're in a professional field, such as a CPA, lawyer, things like that? Do you think do you think it's easier to thrive and succeed as an entrepreneur in those type of fields?
I think it's easier to succeed as an entrepreneur when you have high level skills to give to the marketplace, right? So when you're a lawyer and you're an accountant, you have a lot of knowledge and people pay for information. So I think if you have high income skills, whatever they might be, it's easier to be successful as an entrepreneur because you can charge a lot more than what the average person can charge. So, and I'm not here to shit on 9 to 5s, right? Like I believe, you make a living from 9 to 5, but you design a life from 5 to 9. Right. So if you have a 9 to 5, cool, but like always work harder on yourself than you do on your job. So if you're giving your job a couple hours a day, you better give yourself a couple hours a day as well to start building your dream.
With you on that one, definitely. So, all right, your cousin put this bug in your ear and you quit your job. I know you. What talk to us about that transition? Because I mean, I know it's not all just like, hey man, I quit my job and then business was booming, baby.
I wish that was the case. Well, actually, there's a tax play in that as well, right? Because please don't quit your job without saving money, fam. Like I had money saved, I was setting aside money, and I had a side business, right, that allowed me to make money as well.
What was your side business?
I had a Turo business. So okay. I had a. Can I give you this run down this play?
Man, get ready to play, man.
Cool. So anybody with a W-2 job, right? Here's the thing. We'll get into taxes in a second, but once you start a side business, right, a lot of your personal expenses become tax-deductible business expenses. So I started my Turo business. I had to use my phone to operate the Turo app. So I had to call people was calling me on it. So a portion of my cell phone was tax-deductible, right? I got to write off my computer. And since my car was a business, I got to write off some of my car expenses as well. So I made like $3,000 or $4,000 in my Turo business that year, but I ended up having like $15,000 or $20,000 in write-offs from the Turo business because all the deductions I was taking. So I had like a $15,000 loss in my Turo business, but when you work in W-2, that $15,000 loss can subtract from your work income. So now you're paying taxes as if you're making $55,000, but you're really only like making $40,000 once you take that $15,000 loss. So it all ends up happening is you get a big refund because you've been overpaying into the tax code. You're overpaying into the tax system. So I use that loss in my business to subtract my work income, end up getting like a $10,000 refund check, and then I use that money to like start my business.
Oh shit! So did you quit right around tax time?
Yeah, it was right around like maybe like April. I think it was like May. So it was like right around. I got my refund check, and I had started my business, and it was a rocky start. But like, here's what I tell people: like, if you can work like 12 hours a day for somebody else, like imagine working 12 hours a day for yourself. Right? It's not as taxing on the mind, body, and soul when you're working for yourself and when you're doing what you love.
And I'm kind of glad that you mentioned that because sometimes people see entrepreneurship and we just think of all the freedoms that come with it, right? But we don't think about the actual 12 days of work. Like, nigga, you got to work.
Oh,
like,
yeah, for sure.
You got to fucking work because it's eat what you kill whenever you take that leap of faith and you actually do start that. So I kind of want to go into what it did look like to actually start that business, and what was some of the structures that you had to build around to make yourself successful?
That's a great question, man. I think, if you're going to be an entrepreneur, you got to have discipline, right? You got to have discipline. Since I was already used to working 12 hours a day in my corporate job, I just kept that same schedule. I wake up at 7, sit down at 8, lunch at 1. I kept my same schedule so that I can be discipline myself and discipline my environment to succeed, right? So I implemented, those strategies, and then I just made sure I got better every day. I read something every day because like you want to work in your business, but you still want to work on your business, and part of that is working on yourself as an entrepreneur. So I had to put in that work, put in that time to learn, and every day just try to get better, man, and then build relationships, because relationships will always be your greatest resource. You know what I'm saying?
Especially as an entrepreneur,
Absolutely.
Definitely. So let's talk about building client base, right? You're coming in a new business, new CPA. You were working in corporate. how do you start getting clients?
I got a hack for this. Okay. And I think your audience will get something out of this. So the easiest way to build clientele when you're starting out is to do work for free.
People don't like that answer.
People don't like that. Let me break it down. Here's why.
Is this camera on me?
Here's why doing work for free is so dope and so pivotal for starting out entrepreneurs. Number one, it allows you to practice. Let me tell you something, King. Let me tell you something, Queen. You are not going to be as good as you think you are when you start this business, right?
You mean to tell me I'm not the coldest?
No. You got to put in the work. So doing work for free allows you to also practice for free. And if you mess up, people are not going to be as upset because they got some free work. Like, you know, we went to the barbershop, got a free haircut. You knew what you were signing up for, bro. Like, you know what I'm saying? Like, you knew what you were signing up for. Your grandma took you to a barber school. Yeah. You knew what you were signing up for. So doing free work, number one, it allows you to practice for free. Number two, it allows you to build what's called relationship equity. Because now where you're doing work for free and you do a good job, people are like, yo, like, thank you. I appreciate that. So now you're building this relationship equity with different people in your industry, different potential clients. And then number three, which is extremely important, it allows you to get social proof. So when you do good work, you have them people give you testimonials. You have them testimonials to your website. You have them testimonials to Yelp. So now you got free practice. You're building relationships. And you got social proof that you can do a good job. So now when it's time to actually start the business, guess what you can do? You can go back to all those people you help for free and say, hey, do you know anybody that could benefit from my services? Like, if you do, give them my card, introduce me to them. Now you have this I call like this tribe of people that's willing to speak on your behalf because you built those relationships, right? Not to mention, entrepreneurs' biggest problem is they don't know how to charge properly. Right, because you don't know your worth starting out. So what I did after I did all that free work, I went back to those people and said, "Yo, I know this was free, but like, how much would you have paid for something like this? How much would you have paid for this service?" Right, and they gave me their numbers. So I took all those numbers and I averaged them out, and it turns out that people were willing to pay 3 times as much as I was about to start charging.
Oh shit!
So now I came out the gate able to charge accordingly because I knew my value from doing that free work. Right. So those are the reasons why doing pro bono work can be extremely helpful.
How long would you suggest doing the pro bono work? Because people might be hearing this, Card, I got bills. I can't do this shit for free forever.
Right. No, for sure. And again, that's why you need to have some money saved when you're starting your business because you're going to need that, right? But I say like, a month, maybe 30 to 60 days, do free work. Again, the point is to practice. The point is to build relationships. And the point is to get that social proof. So now when somebody comes to your website, you have all these testimonials, right? So it takes the risk out the equation of having to work with you.
Man. That's gems, and that's not just for the tax perspective.
That's for any
business.
That's a business entrepreneur lesson right there.
Because, like you said, nobody wants to work for free, and I want to stress that point again. You gotta have some money saved up. If you gonna just jump all the way off the porch, because I mean we just spoke about this on the previous episode. Like you gotta have some strategy with what you're doing. You're not gonna just be like, "Hey man, fuck these people, I'm out of here." You gotta have the FU money first,
You're gonna be right back in there.
You gotta have the FU money first. That's all. But so. All right, you start building up clientele. You start to grow your CPA business. When did social media come into play?
Man, it's funny because I was like against like going hard on social media, right?
Bro, you're one of the most prominent tax advisors on social media, I'll say at this point.
Thank you, I appreciate that. But I really started going heavy on social media like 2020, like when COVID happened. And that was only like 2 years ago, bro. Like, you know what I'm saying? But what happened was, I was talking to one of my mentors and getting a mentor, if you want to know the hack to success, everybody needs to have a mentor, right? Because you cannot teach what you do not know, and you cannot lead where you did not go. So how you gonna lead yourself?
Say that shit one more time. I need you to rewind that bitch.
I ain't gonna hold you. Hey DJ, run that back.
I say you cannot teach what you do not know, and you cannot lead where you did not go. Right? So how you gonna teach yourself something you don't know? How you gonna lead yourself somewhere you never been? Right? So I had a mentor, and he was like, Carter, you're very smart. I love what you're doing, but it's not the best people that get the business. It's the most well known. Right. So you have to put yourself out there and you have to let people know who you are and what type of value you can add. And I was like, well, what about if I get on social media and start giving away my information? Like, what if people don't buy from me? He said, if you feel like you're giving away too much free information, that means you don't know enough. You need to go back in your tool belt and learn some more. Because if you master your craft, it is impossible to give away too much free information because you know too much. So once I knew that, I kind of went in and started like going heavy on social media and teaching and giving value, and it blew up my business overnight.
Love it. I love it.
And I think another thing to add with that is with giving free information, people lazy. So people don't like to implement the free information that's given anyway.
Yeah,
that is a fact.
Yeah, 90% of people not gonna do nothing with it. Unfortunately,
they gonna like it. They gonna be like, "Oh, that's fire."
Yeah, right.
But
right.
then
they gonna keep on scrolling and go look at the fucking "I wanna go home" video.
But to that benefit of it, also with the social media marketing, that is also putting you top of mind because being to Jalen's point, being that they're lazy. Now, whenever they want to actually get it done, you're the first person who they know can go and get it done. So it's a benefit of putting free information out there because now you become, I look at it like the same way fast food companies do marketing. Mm-hmm. They got billboards, they got radio ads, they got all this. And then next thing you know, you get hungry, it's like, damn, I could go for that. Well, it's not that you really wanted it necessarily. It's just that this was in your face the most.
Yeah.
It was, it's, whenever it's just keeping yourself top of mind, and that's one of the major benefits of social media marketing.
Yeah, and people need to understand that humans operate off something called the Reciprocity Rule, which basically means that like if you do something nice for somebody, people feel obligated to do something nice back to you. That's why like, when you say, "Hey, bro, I love your shoes," you're like, "Hey, man, appreciate it. That's a nice shirt." You ain't really like your shirt, but like, you know, when somebody says something nice to you, you want to do something nice back. So when you giving out all this game on the internet, you giving out all this free game, whatever, people feel obligated to buy from you. They're like, bro, like if you gave me this much for free, like I can only imagine what the paid game is like. You know what I'm saying? So people need to operate in a place of abundance, give away a lot of your information for free, and the people pay for the rest. Simple.
Love it. So speaking of operating in abundance and giving away information for free,
what a transition!
Hey man, I
got transition.
If y'all don't follow Carter on Instagram, I highly suggest you go ahead.
You're doing yourself a disservice.
Cofield_advisor, because brother be kicking game and he is the king of the tax-free living plays. So yesterday, Carter told me he had a play that he was going to give out on the podcast. And I mean, if we just let this brother go, he unload the clip on y'all. I ain't going to lie. Like a damn Tommy gun. But what are a few tax-free plays that our listeners can run?
Okay, so would you say your listeners, like some people are like W-2 and some people
Okay, yeah. So let's go. I say our listenership is probably like 75% W-2. And y'all tell me if I'm wrong. And about 25% full-time entrepreneur.
Gotcha.
Like we got I think a lot of our listenership is we got businesses and we got jobs.
Got you. Well, can I give your audience a play on how they can become their own bank and fund their own business at the same time?
Let's do it.
Okay, cool. So were you at a job, right? You the face. When you're
I had to process what this man just told me.
You can become your own bank and then use your own bank to start your business. So here's the play. When you're at work, right? Most people have a 401k there, right? And you know, most people when they quit, they want to use that 401k money to like start their business. But when you take money out your 401k, you're gonna be taxed on it, and you can be penalized for if you take that money out before 65. So here's what you can do. When you decide to leave your job to start your business, you can roll over your 401k at work into what's called a solo 401k that you start yourself. So you quit, you open up a solo 401k, you can do it for free, and then you roll over your 401k money at work into the solo 401k that you just opened, right? Mm-hmm. That's not taxable, it's a rollover. When you have a solo 401k, you can borrow up to 50% of whatever the money is in your 401k. And if you know anything about taxes, loans are not taxed. Loans are not taxable. So now let's say you had $100,000 in this 401k at work. You rolled it over. You can take a $50,000 loan from your 401k into your personal account, tax free. You can now use that money to start your business, right? And then, so you use that money to start your business. And then when you're paying the loan back in monthly payments, Who you think you're paying interest back to? Yourself. So now you just took this money that you couldn't use, leveraged it, used it to start your business, and now when you start making money from your business, you can pay yourself back, and then your money is not interrupted because you're paying yourself back interest. So you got tax-free money, you're building interest on yourself, and you use that money to start your business and live your dream life.
Man, you know what you just brought up actually circumvented a common issue I think we've heard multiple times on the show now when it comes to using your 401k from your employer. Whenever you quit your job, you gotta pay that loan back. But if you roll it over to the solo, you no longer have it tied to your employer.
Exactly. So don't take the loan out from your employer, because then you take the loan out from yourself, right? And then you can control the payments. Then when you pay it back, guess what? You take another loan if you need it again. And like that's what wealthy people do, yo. Like they use their money to buy assets, aka invest, then they borrow against their investments to either fund their lifestyle or fund other investments, then they pay it back and they're paying interest back to themselves, right? So their money is uninterrupted and it's growing at the same time, and they're using that tax-free money to fund their lifestyle.
So I got a question. Are there any risk associated with doing this method?
Well, there's always risk associated with doing anything. Like obviously, if you don't pay the loan back, you got a problem, right? You know what I'm saying? So I would just say, never take loans out without a plan on what to do with the money. Okay. Like so many people want to get business credit, get business funding. What you gonna do with it, bro? Right?
Buy a G-Wagon, brother. I gotta get the G-Wagon.
Yeah, right. But like first of all, and we could talk about car plays in a second. Do not let these people on Instagram fool you. Do not buy a car that you can't afford just to save on taxes. You hustling backwards, right? You hustling backwards because there's no point of writing something off if you can't afford it. Because now you still have to pay the loan.
You got to be making the money.
You got to be making the money to write it off in the first place. So I tell people all the time, focus on making money first, and then when you start making the bag, now we can focus on how to keep the bag.
And I'm glad you said that about the cars and stuff, because there are other ways that you can save on taxes that are advantageous for you, right? Such as contributing to, is a Roth, is that a tax saving?
Yeah. So I love where you're going with this. So like there are ways that you can save on taxes and build wealth at the same time.
Yes, sir. That's where I want to go.
Right. So like one of the ways you can do that is, so you can open up an IRA, right, which is cool, but like the limit on IRAs is $6,000. Mm-hmm. So if you invest $6,000 in a traditional IRA, you get a $6,000 tax deduction, which is cool, right? But if you open up a SEP IRA or a solo 401k as a business owner, you can put away up to $61,000 per year. $61,000 per year. So when you start a business, you're making good money, you open up a solo 401k, you can put up to $61,000 in there per year, and you get a $61,000 tax deduction for doing so. And if you hire your spouse into your business, we can talk about why that's a good idea. You now get to contribute for her or him as well. So now it goes from $61,000 to $122,000 that you can put away per year. You're investing money to build wealth, and you're getting a $122,000 tax deduction in the process.
And the reason you're getting a tax deduction, because I know Jalen mentioned Roth, right? Mm-hmm. The reason you're getting a tax deduction is because these are taxable whenever it comes time to actually withdraw the money from these accounts.
Absolutely.
In retirement.
Absolutely. And what I tell people is that I like to do a mix, right? Because we don't know what the tax rate is going to be 15, 20 years from now, right? Right. And if I was a betting man, it might be higher, right? So what I do is I encourage people to put a portion of your money in a traditional account and then a portion of your money in a Roth account. So now you're still getting some tax deductions today for investing in the traditional account, but you also have some tax-free money in your Roth account for whenever you need to take it out. So now you got a balance of, I have money that's going to be taxed and I have money that's going to always be tax-free.
Got you. And the reason Roths are tax-free is because you have already paid taxes on that money.
Exactly. So you're contributing what was called after-tax dollars. Mm-hmm. And so because you already paid taxes on that money will never be taxed in the future. So I love Roth accounts, but I also love getting some tax deductions now. That's why I encourage people to split it up. You can do 50% Roth, 50% traditional, or have whatever percentage you want. But I do like still getting some tax deductions today.
And it's cool that the government actually gives that incentive, because I hear a lot of people, they'll shit on 401ks and these tax deferred investments. Like, why would I wait 50 years to touch my money? But you just given an example on how you can still access that capital without actually having to take the penalties to touch your own money. And my part with the whole argument with that is, bro, who don't want to have money when they old? Like, I don't understand that argument. Like, when we talk about dollar cost averaging, right? I think that's one of the most frustrating shits in the world. It's like, you tell somebody, the easiest way to become a millionaire in this world, bro, if you dollar cost average $300 a month into an index fund for 20 years, you will guaranteed be a millionaire.
Right.
Well, why would I want to wait 20 years to be a millionaire? Right. Nobody said that.
Here's the thing. The 20 years is going to pass regardless. The 20 years is going to pass regardless. It's up to you. Like, do you want to have money then, or do you not want to have money then? The 20 years is going to pass, so you might as well put yourself in a position to have money later. And guess what? It might not even be about you, but it might be about your kids, right? It might, you might want to use it to your spouse. You never know, bro. And like, we gotta, as a people, get away from like, we gotta lean into delayed gratification. You can't. It's okay to delay a little bit of gratification to later, right? Like, so that you can have money down the road. I think it's so important.
So yeah, healthcare costs is an expense that we often discount. Healthcare is like, the industry is really not that regulated. So people can charge whatever the hell they want to.
Right.
Insurance is expensive. Your body's starting to deteriorate, and then you have to have surgeries and things like that, and we don't realize and take that into account whenever you're planning for retirement. You think I might have $250,000. This, like, that shit could be gone in one surgery with rehabbing.
Facts. And so everybody should, in my opinion, everybody should have what's called an HSA. Right, HSA is a health savings account. Right, if you have a high deductible health insurance plan, you can open up HSA. The dope thing about HSAs is they have a triple tax benefit. Right,
wait a minute,
triple, 3 times, 3x. Right, so when you have an HSA, when you when you contribute the money to the HSA, you get a tax deduction. So the max you can contribute, if it's $3,600 if you're single, $7,200 if you're married. So you get a $3,600 tax deduction for investing the money into the HSA. The money grows in the HSA because it's invested. The money grows tax-free in the HSA. And as long as you use the HSA money for health-related expenses, you never pay taxes or penalties on that money, right? So you get a tax deduction for the money going in. The money grows tax-free. And when you use it, you never pay taxes on it when you take it out. What's dope about that is people don't understand how wide the spectrum is on what they consider to be health
that's where I was going.
So one of the plays that my homie put me on is, did you know that if you got glasses on, right?
Yes, I do. I can't see for shit.
Right. If you just so happen to want to get Cartier frames, Cartier glasses, you can use your HSA to pay for the Cartier glasses as long as you get a prescription in them. So that everybody that wants to flex and wear the Cartier, wear the Gucci glasses, let your HSA pay for it. That way you can write off the Cartier frames. Exactly.
Tax-free flex.
Gym memberships are considered health as well, right?
I believe so. It's a wide list on the IRS website. But like, people don't understand. Like, you can write off so much with your HSA. You get an HSA card, so you literally can take your HSA card to Cartier or Gucci, get your frames, put your prescription in them, and now, like, again, I'm not saying go buy expensive glasses. I don't think that's a waste of money. But if you're gonna buy it anyway, at least buy it with tax-free money.
If you're gonna spend the money, you might as well get a tax benefit from it.
Exactly.
So I did have two. Let me ask mine real quick.
Is it
brother.
pertaining to the HSA?
Yes.
Okay, cool.
Yeah, we still in the HSA.
Okay. I just ain't want you to transition to it.
Hold on, we just stay here for a little while.
What is considered a high deductible healthcare plan? Like, is there a certain number amount on that?
Yeah, it's a certain limit. I think it's like you have to have a $5,000, $6,000 deductible or something like that. The stipulations are clear on the website on what your high deductible health plan qualifies for. But all you gotta do is call your insurance company and say, hey, give me the high deductible plan options I have, and then they'll pick them for you.
Gotcha.
So you have to have that to get an HSA?
You have to have a high deductible plan to get an HSA. And what's dope about a high deductible plan, because your deductible is high, your premiums cost less. Right? So now you're lowering your monthly health insurance costs. And as a business owner, health insurance premiums are tax deductible as well. Right? So many people are like scared to quit their job to start their business because they say, well, what am I going to do for health insurance and what am I going to do for a retirement account? Number one, you can get your own health insurance and you can write off the premiums in your business as well. And then we just talked about when it comes to retirement plans, you can open up a solo 401k and roll your money there. So like benefits should not be a reason that's stopping people from starting the business.
Some golden handcuffs
that they want. Exactly. So it's phantom handcuffs because you can do this stuff yourself if you just have the information on how to do it.
So my question with the HSA was the investing part. Do you get to select what you're investing in, or is this being done like through like a financial advisor? Like, do you know how that part works?
It's just, so open up HSA is no different from open up a Roth IRA. You pick the company, Fidelity, Vanguard, whoever you want, and then you get to manage your own investments. So
it's basically like a brokerage account.
It's basically like a brokerage account. It's just like a Roth, a brokerage account. You go to the institution to open it. Like once you get your deductible plan from your health insurance company, you can go to any brokerage company and open up your HSA and control your money that's invested in it.
And so you can pick your investments and have like a cash position to do the things that you would want to purchase. That's hard.
That is hard.
You can actually open up what's called a self-directed HSA and then use your You could open up what's called a self-directed HSA, fund it, and then use that money to invest in real estate if you wanted to. So your HSA can own properties.
Wait a minute.
Yes.
Huh?
Yeah, so it's called self-directed. It's called self-directed account. So you can open up a self-directed IRA. You can open up a self-directed 401k. You can open up a self-directed HSA, right? And all self-directed means is that you get to self-direct where your money is invested in. So you can invest in collectibles. You can invest in crypto. You can literally buy properties within these accounts because you're self-directing where the money goes.
Damn.
Bust your head on that one. I ain't gonna lie, you got me on that one. So I do want to transition from the HSA.
You cool now.
We good now.
So Carter, again, like I said, man, you the king of the tax plays, man. One of my favorite plays that you taught us about was the home office tax deduction, and I know that was like a major.
Shit set up right now.
Yeah,
I got a whiteboard. So I got my desk.
I love it.
Did you calculate the square footage yet?
Not yet, but we're gonna get to it.
Can you just explain that play real quick for our audience?
Absolutely, man. So people ask me all the time, like, Carter, what's the number one tax deduction that people are missing these days? And my answer is simple: it's the home office deduction. Because when COVID happened, 90% of people started working from home, right? They had a desk set up, had an office set up. And when you have a dedicated space in your home that you only work from, you can now write off that space on your taxes. So literally you can get the IRS to help pay your rent, right? Because you get to write off a portion of your rent. So how it works is, number one, you have to have a business, right? All the tax plays come from having a business. Number two, you have to have a dedicated space. So I love having like a room, a dedicated office room, or like your basement, whatever. If you have a dedicated space for work, all you have to do to figure out how much the calculation is take the square footage of that room. So let's say it's 500 square feet, and then let's say your entire apartment is 2,000 square feet. So your office represents 25% of your home. So, 500 divided by 2,000. So you now take that 25% and you multiply that by your rent, by your utilities, by your electricity, by your water. So you add all those up. So let's say your rent is $4,000 a month. Mm-hmm. You take 4,000 times 25%. You get a $1,000 per month tax deduction for working from the crib. Right. So now you get a $12,000 per year tax deduction for having a home office. So what I tell people, like even when I'm looking at 2 bedrooms now, because I'm about to move, I might make my master bedroom my office and the other bedroom my room just because it's larger. And that's going to increase my tax deduction. So like now I might be able to, if my rent is again, like, $4,000 a month, I'm getting a $12,000 write-off every year. That's going to save me, if I'm in the 40-50% tax bracket, that's like literal $6,000 back in my pocket. So I can have the IRS help pay for 30, 40, 50% of my rent by having that bigger home office.
Sheesh. And for everybody who don't know how to calculate square foot, I'm going to give y'all some basic math. Length times width.
Easy money.
That's it.
Easy money. Yeah.
That's it. I just want y'all to know that.
I appreciate that, though. Yeah. Some niggas didn't pay attention to that class.
I'm just telling you.
Investments taught us that way.
I'm just telling you.
Bro, I ain't gonna lie.
We ain't gonna do it to y'all niggas, but
damn, nigga, damn.
I got a question though. So let's say you're in an apartment, a 1-bedroom apartment. What if you have just like a little area of your apartment? Does that still work, or does it have to be a specific room?
Great question. So it has to be an enclosed space, right? So
Damn, my shit might not be able to work.
Pay attention. I got you. Let me tell you how to finesse this. If it's in your bedroom, that's a no-go. So if you have your office in the corner of your bedroom, that's not happening. But if you have a corner of your living room be your office, if you get like a bookshelf,
Partition?
a partition, a bookshelf, or something to enclose the space. So what I have in my living room, I have my office set up, but I have a bookshelf closing it off, and then I have like a sliding little panel. So it's now an enclosed space. So all you have to do is get creative with your decorations and make an enclosed space be your office if you don't have the capability to have a room.
Bet.
So
Easy money.
You gonna run the play, huh?
Run the play.
With this, is there like a specific form that somebody needs to fill out? Is it like something that individuals should do, or they need to consult with a tax advisor to take advantage of it?
That's a great question. So if you have a business or a side business, you need to be working with a CPA or an accountant because you're going to cost yourself more in mistakes, fam. You're going to cost yourself more in mistakes. Don't go to
TurboTax, huh?
You'll cost yourself more in mistakes than it costs you to hire an expert. Because here's something my mentor taught me. Experts are expensive, but amateurs will cost you a fortune. Right? Experts are expensive, but amateurs will cost you a fortune. So it's okay. I recommend you pay somebody to do your taxes once you start the business because they should help you save more money. And like, let me say this. As a CPA, I work for all my clients for free. All my clients. And you're in a good CPA.
You gotta break that down.
I'm gonna break it down. I know I have to break it down. And a good CPA should always work for free. What I mean by that is they should always save you more money than they cost you. Right? So if I'm gonna charge you $10,000 for my services, I better be able to at least save you the money that you pay for me. That way, I'm always an investment and not a cost. So if you're working with a CPA or a tax advisor or whatever, and they're not saving you more than they cost you, you should find somebody new. Right? So that's what I mean by I work for free, because any clients I work with, I'm saving them more money than I'm costing them. So I'm actually an investment.
So I kind of want to stay there for a second, because last night at the event, we spoke about having that team, right? How do you get your CPA, your financial advisor, and your attorney all to come up with a game plan that is right for you? Because we were talking about, a lot of the write-offs and stuff, but we also talked about planning for what you want to do. Sometimes, taking a lot of write-offs, it can hinder you from being lendable if you're looking to buy homes and stuff like that. So how do you get your team to come together with that game plan that can help you be successful for whatever you're trying to do?
Absolutely. I think it's vital that you introduce them at the start out, right? And if they're not willing to work together, then you need a new team, because your lawyer needs to be talking to your accountant needs to be talking to your financial advisor. And if they're all doing their job properly, they have no problem being a connection. Now there's disconnect if one person is lazy and the other person is really working for you. So I think it's pivotal that you introduce them from the start, and honestly, they will let you know if somebody's slacking. Because if they say, hey, like, bro, we can't get in touch with your CPA, or hey, your CPA is lacking, that lets you know that you got a chink in your armor and you need to find somebody new. So I think having your experts all work together keeps them on their A game, and they all help level you up.
It's like checks and balances.
Exactly.
Like the government.
Exactly.
You got the legislative, the administrative, and damn, what's the other one?
You set yourself up for that.
Damn, boy. Damn.
Judicial.
There we go. The courts. There we go. I did set myself up for that one. But hey, I like it though. Checks and balances, like it makes sense, because if they're not communicating with each other, like you said, it's a team. Your team should work for you.
Yeah.
And if you happen to be the central clog point between it, then that's friction in the process.
Exactly.
Like, they should just be keeping you informed. You shouldn't have to be the person that forces it forward every time.
Absolutely, man. Absolutely. And I think that, having a team is important, but you also have to educate yourself too, right? You can't, because nobody's ever going to care about your money more than you, right? And I tell people all the time, like, information changes situations. So we got to make sure we leave the norm and get informed. And that goes in everything that you do.
This nigga's a rapper. You gotta get him in the studio.
No, but that's funny. But no, in all seriousness, I tell people, like, yo, like, you still have to do whatever it takes to seek information. And it's what's so dope about being an entrepreneur, bro, is, well, first of all, we've been taught to, and before I say this, I went to college, I got undergraduate degree, got a master's degree, all that. But we've been taught to go to school, pay somebody $25,000 a year, get $100,000 in student loan debt to learn from somebody who's not being who we want to be or doing what we want to do, right? And we can't write off like the tuition on our taxes, and you can write off a little bit of tuition, maybe a little bit of student loan interest, but not a lot. What I encourage people to do now is like go hire a coach or go pay for like online education, because when you're a business owner, you can write off courses, you can write off education, you can write off mentors, and that allows you to still get the information from the source. And that way, when it comes to investing, taxes, all that stuff, you still have enough information to check your team, right? If you have a CPA and you don't know about taxes, how you gonna know if he's doing his job right?
That's a fact.
Right. So I think that it's important to get the information, man, and invest in yourself. And when you're a business owner, you get to write off investing in yourself, which is important.
I'm glad you brought up the student loan part too, because this is something I did want to ask
student
you.
loan forgiveness?
Yes. Did you have enough time to look into the whole student loan forgiveness plan and stuff like that? So I know that they're stating that, I think the cap is $150,000.
$125 a year for $20,000 of forgiveness.
Yeah. So
and
does that mean, is that like gross or is that net? Can deductions come into play?
Great question. So number one, when it comes to student loan forgiveness, it's $10,000 a person for people that don't have a Pell Grant. If you have a Pell Grant, it's up to $20,000 in forgiveness. And I think the AGI limit is $120 for single and $240 for married. But so it's your taxable income. This is why learning about tax deductions is so important, because if you make over $120,000, you miss this entire student loan forgiveness. But if you understand how to leverage tax deductions, you can write off enough stuff to bring you below that $120,000 threshold so that you can take advantage of this forgiveness. I had a student this year that she has like $80,000 student loan debt, but she makes like $300,000 a year. But since we've been working with me, we were able to get her AGI down from 300 to I think 90. Right. So now, because she had a tax expert that was helping her learn about write-offs, she's actually going to be able to get $20,000 student loan forgiven that she wouldn't have got if she didn't have those tax deductions.
AGI is annual gross income.
Exactly. So if you make a lot of money, you need to leverage write-offs, run these tax plays to bring you down so that you can apply for the forgiveness.
Once again, great transition, because a question I had was, is there a certain percentage that you suggest your clients to writing off? Is that like a certain number?
Well, I believe it depends on your situation, right? And if you don't need to apply for any loans this year or need to try to get any funding, I'm trying to get that number as low as possible, right? We're trying to run as many tax plays as we can to keep that money back in your pocket, because not just about how much money you make, it's about how much money you keep. So I don't think there's a percentage number, but if you don't have any loans that we're trying to apply for, we're trying to write everything off, right? And I think here's what most people don't know. When most people come to me and they learn about these tax plays, they say, yo, I missed out on like $20,000 last year. I missed out on $30,000 last year. Did you know that you can go file an amended tax return, reapply all those deductions that you missed, that you didn't know about? You can add those back, file an amended return, and get all that money back that you missed out last year.
Wait a minute. How far back can you do this?
You can go back up to 3 years. So let's say you knew nothing about taxes, but you listen to this podcast and you realize you didn't write off your car, you didn't write off your home office, you didn't write off your health savings account.
I can go back and
can go back and apply those deductions each year in the past up to 3 years. So let's say you missed out on $15,000 a year. You can now go back and get $45,000 back from the government by reapplying those deductions and filing amended tax returns.
Big Sam, I need my money, dog.
You gotta run me that.
Run me that check, bro. With interest.
So let me.
Wait a minute.
Wait a minute.
So I had one more question with the student loan piece, and damn, I wanted to ask something else about this too. But I'm gonna go back to the student loan thing first. Okay. So I'm hearing that the forgiveness may be taxed in certain states. I think I seen South Carolina is adding it to your taxes. There's a few states. So how would that work? Would that be considered like taxable income? Would it increase your AGI?
Yeah. So on the federal level, it's not taxable.
Okay.
So you don't have to pay federal taxes, which is the majority of what people are worried about. But on the state level, in some states, you will have to recognize that as income. So if you get $20,000 forgiven and your state income tax rate is 10%, you will have to pay $2,000 in state income taxes for that forgiveness. Yeah.
$2,000 to save 20.
I mean, I'll take that. I'll take that every day of the week.
Because they wouldn't get that money no time soon. Anyway, you feel me?
I'll take that 7 days a week, twice on Sunday.
So, and my next question was related to the retroactive getting deductions. So, there's a difference between tax deductions and tax credits, correct?
Absolutely, yeah.
So, deductions, would you still get a refund with the deduction? Or, because I know credits, you can be given money from tax credits, correct? So, with deductions, would you still receive a refund with the retroactive ones, or would it just kind of like negate your tax liability if you still had some outstanding?
Yeah, so I'm gonna break this down so for the listeners to understand. So like tax deductions are not dollar for dollar. So basically, if you had 30% tax rate and you get a $100 tax deduction, you're actually only saving $30 because it's you only save on taxes what your tax rate is, right? So like again, if you had 30% tax rate and you get $100 tax deduction, you actually only saving $30 on taxes. 100 times 30% is $30, right? Tax credits is dollar for dollar. So if you get a $10,000 tax credit, it subtracts from whatever you owe the IRS. So you like literally can get a $10,000 tax refund. You know what I'm saying? So tax credits and tax deductions, tax credits are better than tax deductions. So to answer your question, if you go back and add all these deductions, it's going to lower your taxes, but you also can add back tax credits that you missed as well to try to get that number as low as possible. So tax credits can help you get, refundable tax credits can help put money directly back in your pocket.
Got you. So like that employee retention tax credit that they had, that was directly putting money back into business owners' pocket.
Exactly. If you're not looking at your business and seeing you qualify for the ERC, congratulations, you're playing yourself.
Oh man. So I know we're coming up on time, so we'll get into the last sections of the show. I got 3 rapid questions for you. I'm gonna let David get his question.
All right, yeah, my favorite question, man. My favorite question. So Carter, what's a personal finance tip or principle that you live by that you would like to share with our audience?
Try to get one that y'all probably haven't heard before. I want to say, is that financial tip?
Yeah.
Okay. I believe in paying yourself first, obviously, but I also believe in if you pour your wallet into your mind will fill up your wallet. Right? We talked about that yesterday. If you pour your wallet into your mind will fill up your wallet. So I'm an advocate on spending however much money it costs to invest in yourself, because when you become a more valuable person, you attract more money. Right. So money is looking for a good place to stay. So it's looking for a valuable person who pockets to belong in. And the way you become more valuable is by investing in yourself.
Okay. So here go my 3 questions.
Okay.
First question. Are you frugal or are you a flexer?
In what area of my life?
However you want to take it.
I'm frugal in like what I wear, and I'm looking at today is not a frugal day. I have expensive stuff on, but I am usually frugal in what I wear.
Well, boy, I got the.
I'm pretty frugal in my lifestyle, but what I flex at is traveling. So I take a 1 month trip out the country every 3 months. Right. So literally I'm gone for 30 days. I just came back from Budapest, Barcelona, London, and Pamplona, Spain, while they're running with the Bulls. So
you did that shit?
Yeah, I'm one of the few black people that were over there.
Yeah, I know you was gonna be one of the few black people.
Yeah, so I believe in flexing for experiences.
Oh wow. Okay. Very interesting answer.
Yeah.
Second question. How are you building wealth, either to pass down to someone in your life or just, to leave a legacy?
Well, I believe the generation of wealth is so important, man. And if it's one thing I want to encourage people is to plant seeds for trees that you one day plant seeds for trees whose shade you won't stand under one day. And what that means is that like plant seeds for later, fam. Like it's not all about you. So one thing I do is I employ my nieces in my business, right? So I'm able to pay them, right, for my business. I get a tax deduction for paying them, and they receive the money tax free, because if I pay them less than a standard deduction, they don't have to pay taxes on that money. And so, but now that they have earned income, I'm making them invest $6,000 of that money I pay them into a Roth IRA. So now by the time they turn 18, they're going to have $50,000, $100,000 in tax-free money in their accounts.
It's hard.
That's hard. That's hard. My last question. Do you have life insurance?
Absolutely. A couple policies, because I believe in the buy, borrow, die strategy. Just like you all talked about in the previous episode, I think it's so important that we leverage tools to get tax-free money.
Hey, I love it. I love it. Thank you so much, Carter. It was a pleasure having you. This is actually your second time on the show.
Yeah,
for people who didn't know, y'all go listen to that first episode.
Can I do your audience a favor?
Hey, man.
Yeah, do them a solid.
Okay, so I just finished updating my tax-free living ebook, where I added, it had 200 tax deductions. Now it has almost 300 tax deductions in alphabetical order. So now you don't have to ask the question, is something tax deductible? You can just go into the ebook, and it's alphabetical order. So each expense you get to learn, is it tax deductible and how to apply it to your business. And I want to offer your audience 70% off.
Hey man, y'all heard it here first. We're gonna have that down there in the show notes for you.
Best believe.
Appreciate
YouTube, podcast, y'all go ahead, click down there. Get the little promo code, throw BWR at the end of that joint.
Got you.
70% off 300 plus deductions.
300 plus deductions.
We're gonna save us some money on these taxes this year, baby.
Then you can go back 3 years and apply that shit.
I'm telling you. Not to mention the book is tax deductible as well. So you're getting a tax deduction. You're getting a tax deduction to learn about tax deductions.
All I'm gonna say is this: applied knowledge is power.
Facts.
There we go.
Carter, I appreciate you coming back on the pod, coming out to Dallas, rocking out at the event with us, man.
For sure.
For everybody that wants to know more, how they can tap in with you, where can they find you online? How can they get in with your services? I ain't gonna lie, y'all. He said something earlier. Expert's expensive. This man ain't cheap. Don't come here. Hey, yo, man, can you be my CPA for $300?
Discount.
Hey, but no. For seriously though, how can people tap in with you and get in touch with your services as well?
It's Cofield_advisor on all platforms, and then you go to link in my bio. I have all my list of services and products right there.
Thank you, sir. Thank you.
Love it.
Man. So before we get out of here, we're going to hop into a few house cleaning items. As always, thank y'all for tuning into the podcast. Y'all make sure y'all leave us that 5-star rating and review for you boys. This October, we got the Black Men Summit coming up. Black Men Summit 2022, partnership of Black Wealth Renaissance, Black Menswear, the Dad Gang, and Black Man Can. 4 Black men-led organizations looking to change the narrative of the story of Black men in America, man. And we doing the work. We've been doing the work for some years. You listen to this podcast, so you know what we about. We partnered up with these brothers because we want to bring together Black men in Texas so that we can create a unique environment for us to learn how to build wealth, build our community, build our health, and build legacy. That's what we all about. So blackmensummit.com. I need all y'all to pull y'all phones out. Go to blackmensummit.com. and grab your tickets today.
If you can't make it to Dallas, we got live stream options. But I'm gonna tell you right now, this is something that you want to be at.
You want to be in the room.
It's not just a summit. Like, this is an experience that you've never seen before. We're gonna have a career fair there as well to help those of you who are in the 9-to-5 area elevate. And we're not just talking about no bullshit jobs either. We're talking about jobs that will be high paying.
We ain't coming with no day labor or shit.
Yeah, nah. So we're here to actually help elevate us on all fronts, guys.
Yes, sir. So again, that is blackmensummit.com. blackmensummit.com. Y'all visit that. We look forward to seeing y'all there in October. Jalen, you got anything to add before we dip, bro?
Once again, y'all just make sure y'all, if y'all love the show, if y'all don't want to buy a product that we have, y'all donate to us. Once again, our goal is to have our studio up and running at the end of this year. Y'all be supportive. Thank y'all for listening so much. We bring guests in like this all the time, just to make sure that y'all are being able to elevate as well. So help your boys out.
Yeah. And y'all, grab that tax-free living ebook again, man. It's in.
Ain't donations a tax deduction as well?
I can teach you.
Charitable.
I mean, there's ways that you can do it.
Hey, I'm just saying.
Yeah. For facts. Yeah.
Well, on that note, y'all, this is Black Wealth Renaissance.
And what's the
Signing
point
out.
of having clout? You can't cash it out.